Namaskar, hello everyone. Today we will discuss about what we mean by the preference shares. What the preference shares actually means. We know that there are two types of the shares. First, equity shares. Second, preference shares. Today we will discuss about the preference shares. When we talk about the preference shares, the word itself, preference shares, that means what? The word preference signifies that this type of shares carries preferential rights. They entertain priority over equity shareholders. So this represents all those types of the shares which carries the preferential rights over equity shareholders. Now we will discuss what the preferential rights they entertain, the preference shareholders entertain over the equity shares. First, they get priority at the time of distribution of the dividend over equity shareholders. That means what? When the company earns profit, the company distribute the dividend. At the time of distribution of the dividend, the preference shareholders gets the dividend. Thereafter, the equity shareholder gets the dividend. So they get priority in case of distribution of the dividend when the company earns profit. This is the first preferential right that the preference shareholders entertains. Second, they get priority at the time of payment during the time of the liquidation. When a company is being closed down, the company sell all of its fixed assets and all those money realized out of these assets. This is called the liquidation. When the liquidation money received by the company, then the company used to pay first the preference shares. Then that payment will be made among the shareholders. So this is the main two cases that the preference shares entertains the preference or priority over equity shares. The other types of the characteristics of the preference shares is that first, they have a limited lifetime. That means they carries a maturity period. The preference shares are not the shareholders for the lifetime of the company. They are shareholders for a limited period of time. That limited period of time may be 5 years, 8 years, 10 years, 12 years, 15 years, whatever may be. But one thing is sure that just like the equity shareholders, they are not the shareholders for the lifetime of the company. They are shareholders for a limited period of time. At the end of the term, their shares are given back. So, preference shares are shareholders for a limited period of time, not forever. Third, the another characteristics of the preference shares is that they plays a less active role in the management of the company. We know that the equity shares plays a very important or very active role in the management of the company. These things not happen in case of the preference shareholders. They are less inactive in comparison to the equity shareholders. This is all about the preference shares. So preference shareholders entertain a preferential rights over equity shareholders. I think you have understand the concept about the preference shares. If you understand, then like my videos, subscribe my channel and share this video to your friends. Namaste.